Okay, picture this. It's dumping snow in Bedford Falls. George Bailey's pacing the living room, staring down Mr. Potter. That greedy banker, hoarding cash, crushing dreams, turning the whole town into renters. You think you run this place? Potter sneers. But something snaps in George, and he rallies the entire town.
Yeah, that's 2025 in a nutshell, Manley. The feds is Potter with rate hikes squeezing Main Street, but you're George Bailey, trying to buy a home in the middle of a blizzard. Isn't that kind of wild when you say it out loud?
It's nuts. But tonight, we're Clarence. We're showing you how to earn your wings and keep Bedford Falls 2025 a land of homeownership for you and every George Bailey out there, instead of letting the Potters turn renting into the norm. So buckle up and get ready to fly. Howdy, finance legends. Manley Haynes here from snowy Wisconsin. Feels like I'm living in that Bedford Falls blizzard right now.
Aloha from Kauai sunshine, where Potter couldn't even buy the view. I'm Anthony Valentino. Hey Manley, isn't the Fed just channeling full-on Mr. Potter right now with their actions?
Yeah, every single scene, bro. Also, a quick plug. This is mile marker number 3 in our year-long Road Home series. We're taking you all the way to home ownership, one episode at a time. Let's rally the town, legends.
Okay, Mr. Potter. No, wait a minute here. Wait a minute. I don't need 24 hours. I don't have to talk to anybody. I know right now, and the answer's no. Doggone it.
First up, let's dive into Potter's plot, right? So it's Fed greed versus rally to own. Potter hoards cash and crushes Main Street, and the feds are dragging out the rate cuts with a higher for longer mantra. Meanwhile, Wall Street, they're just doing nothing but partying. Isn't that the plot twist that no one's asking for?
Yeah, 100%. It's a twist for sure. 2025 snow, hey, rates peaked, inventory's frozen, but George, he still rallied. And you can too. Hey, Anthony, what's your first move against Potter?
You know, I would tell my clients right now, I would lock with the rates being in the average of around 6.34 before these cuts tease a massive stampede, because it's crazy. One hike divides buyers from owners right now. Right, Manley?
Yeah, it's crazy. Hey, for FHA, it's your Bailey's secret weapon for sure. I always tell people with a little less than perfect credit to go with the 3.5% down. On another note, what's your take on the feds? Do you think they're actually going to be easing rates anytime soon?
Oh, yeah. I think they will be easing. I don't think the feds have a choice but to. My advice is for sure rally now, not later. You can own a piece of the town, and that's the most economical way. I mean, we are in the middle of a K-curve economy. You're either going to be an asset haver or an asset chaser. And statistics and economics show in this type of economy, if you own assets, with inflation, you get richer. With debts, you get poorer, and you feel it. And so every single time you see the cost of living go up, cost of goods go up, and the employment stays the same, you're going to wish that you took that chance and you put that minimum 3.5% down and didn't wait for the perfect opportunity. What do you tell your clients if they're asking you, Manley, hey, should I wait? Should I wait till the storm calms? Or are you giving them advice like I'm giving?
I absolutely am right with you. And we've talked about it over and over again. Don't wait. You're losing out on every opportunity to gain that equity. You're just making a massive mistake, and we've showed it over and over again. The leverage that you create by even just putting, a small amount down, like 3.5% or 3%, depending on if you're doing FHA or conventional. There's just no way around it. This is the best, most sensible way to build wealth in America. Facts.
Yeah, it's recession proof. It's a physical piggy bank. That's what I tell my clients. Yes, it can make you uncomfortable, but it's a calculated uncomfortable because you're putting it towards something, and you're not going to wake up 5 years from now going, I just put my landlord's kid through college.
Yeah. Over and over again. We don't want the landlord to be the winner.
No.
I'll go further than that. I'll say that to the public, Peter Bailey was the building and loan.
Oh, that's fine, Potter, coming from you, considering that you probably drove him to his grave.
Peter Bailey was not a businessman. That's what killed him. Oh, I don't mean any disrespect to him, God rest his soul. He was a man of high ideals, so-called. But ideals without common sense can ruin this town.
All right. I want to talk about some loan tools that we have. They can be used to fight back against the rent forever push. But the real question is, what gadgets did George actually use to crush Potter? Let's talk about loan tools.
Yeah, I couldn't agree with you more, dude. For instance, tools like a conventional 3% down loan. It gives buyers options and it doesn't break the bank. It allows us to drop mortgage insurance, aka PMI, once 70% loan to value is achieved. I tell people, build fast and don't wait for perfect. Also, let's not forget about our veterans, the America's thank you card for the ones who served. They get a nothing down plus no mortgage insurance right out the gate.
Gotta love our vets. Also, we can't forget the number one tool buyers have right now, like the new Rate Mortgage, aka Rate DM app. It's the modern day mortgage loan app that we built. And it runs all in about 60 seconds, not just to get you pre-approved, but in most cases, fully underwritten approved. Not in days, we're talking minutes. This gets clients the confidence right out the gate. Now we can show clients a weapon to stop the renting cycle. It's a modern day George Bailey defense plan.
Yeah, not only that, it sets the tone, right, for the market. It shows even the seller that today's buyer, they're more prepared, they're more confident in this modern day mortgage world that we're coming into.
You know, the thing about George is he brought that courage and that confidence from within when he finally stood up to Potter and said, I'm putting this together. I can make all these people become owners instead of renters. And that's what we're talking about over and over again in this segment here. We're talking about being George and, you know, the real truth behind George, which he came up with the courage and made it all happen. It's a wonderful life. It's a real thing, and it really relates to what we're talking about.
Yeah, and when you see the whole message behind It's a Wonderful Life, it pays perfect montage to what's going on now. It takes a village, right? You can't just buy a home yourself. You need a team. You need a lender. You need a realtor. You need that friends and family to help you with that encouragement. So when you're going into that home ownership mentality, just know it takes a village. Don't be afraid to ask questions. No question is stupid. Because the more information you know, the more educated you are, the more confident you are, and you're more prone to get into that house that you want.
If Potter gets a hold of this building and loan, there'll never be another decent house built in this town. He's already got charge of the bank, he's got the bus line, he got the department stores, and now he's after us. Why? Well, it's very simple, because we're cutting in on his business, that's why. And because he wants to keep you living in his slums and paying the kind of rent he decides. Joe, you had one of those Potter houses, didn't you? Well, have you forgotten? Have you forgotten what he charged you for that broken down shack? Here, Ed, you remember last year when things weren't going so well and you couldn't make your payments? Well, you didn't lose your house, did you? You think Potter would have let you keep it? Can't you understand what's happening here?
Okay, guys, we've got the gadgets, but here's the part that always blows my mind. The angel's edge. Even in this storm that we're seeing, owning, it still wins. So how does wealth actually build in this type of an economy?
That's the time-tested question. Home ownership hedges the economy in your favor. So let's explore the angel's edge. Wealth wins despite the storm. George sees and feels the impact. With gained equity, with community, and more importantly, control over your financial future. I always tell people, owning hedges that Potter's inflation thing. And it literally builds over $200K in average wealth by age 65.
That's right. Even in blizzards like we're seeing now, amortizations are angel's wings that we are needing. And the payments, they snowball principal lower by lower, month by month, until it's completely gone. Isn't renting Potter's con?
Yeah, 100% total con job. Tax breaks, appreciation. I show clients how $300 a month towards your principal reduction compounds like a snowball, which brings me to the next. What is the biggest potter's regret we see currently with today's clients?
Yeah, I mean, I'd say the biggest regret is waiting for the perfect time. These are the financial misses in life that we're seeing buyers do day in and day out. What today's buyers need to be doing is buying now, then refinancing later.
These folks that are so focused on the interest rate, it cracks me up because the interest rate you're paying on rent, it's 100%. If I came to you and said I'm giving you 100% interest rate on your loan, that's not a loan. You're just paying me. You're not getting anywhere. So it always baffles me that we get in these rate-driven conversations and people are waiting for that perfect moment to say, hey, I'm waiting till rates get back down to 3% again. Newsflash, that ain't happening. And you're just losing every a bit of ground you have right now to get on the elevator up into home ownership and build true wealth for you and your family.
Yeah, I even tell my clients, I'm like, listen, if you're not going to buy, I'm okay with that as long as it's based off of strategic action and it's based off of math and it's based off of an understanding and a confidence level. If you're not buying based off of fear, that is not the reason to not buy. 100%.
That we're seeing people, tightening their belts, changing products that they buy, buying less, and that sort of thing. And so it's clearly a thing. It's also clearly a thing that, asset values, housing values, and securities values are high, and they tend to be owned by people more at the higher end of the income and wealth.
Okay, so now we have the edge we need to know to buy and how we actually start the process. So how do we actually rally the town? Here's the 4 steps I'm giving every client we speak to.
That's right. Let's start with step 1. I tell everyone, get the Rate Mortgage DM app for a 5-minute underwriting and 100% confidence straight out the gate.
Hey, in step 2, pick a weapon, whether it's military VA, FHA for a bumpy credit or new credit, or a conventional 3% down, or even 20% down with no mortgage insurance. Whatever the weapon is, this will be our moment when Clarence whispers, "You're approved. Now go live already."
Right? It's more like a loud whisper. But okay, let's talk about step 3. I always say lock when you find the right home or whenever the market is, because we know the future is only going to be about rate cuts. So for the next few years, you never want to time the market. You're never going to time it right. You'll have nothing to show for yourself if you do. Beat Potter's hike through the storms, and everything you do, make sure you're doing stuff out of math and not out of fear.
Yeah. Last but not least, let's talk about the refi thaw. Step 4, reserves. 3 months buffer is what the banks want to see most of the time, with some only needing 1 month. This is how the town wins together, by owning their home, not renting, and making Potter richer.
That's right. Once you have and achieve home ownership, then you want to maintain it. So you're going to ride the market through the ups and the downs and the storms. But no matter what, you're putting yourself first, and you're not renting, and you're not going to rent forever.
Yeah, you're building equity. You're making a wealthier financial decision for you and your family.
Hopefully you like all the education that you're getting from Manley and I. Do us a favor and smash that like button, subscribe and follow, and tell all your friends and family about us.
Okay, rate tracker time. Let's recap the year's wild ride and where we're landing.
That's right. So here's 2025 snow thus far. Starting in January, we were at 6.64. Fed was still grumpy. February, it jumped to 6.9 on that hot CPI print. March, we eased at 6.54 with the bank scare, and it was a rally. But April, it held steady and sideways at 6.57. There was a lot of mixed signals going on there. But May, we saw a spike to 6.79 from the debt ceiling drama. In June, we hit 6.94% because the inflation was finally taking a nap, but there was a lot of uncertainty. July, it dropped back to 6.77 when the feds did a pause. But August, we peaked for 2025 at 7.02 on the oil and rent lag. Potter was very happy at this point in the year. But September, we finally cooled to a 6.81. In October, we saw the most wonderful drop in rates down to 6.31%. November, it settled sideways again at 6.34 with little no action, waiting for the Fed's third rate cut in December. And right now, For the first week of December, we're at a 6.36 with nods of ticking lower by month's end.
Yep, and we're finishing a little off target, but not by much, landing just above the top end of 6.36 with our target of 5.875 to 6.25 by year end. Hey, although we did not hit the target, by the end of the first part of 2026, we'll be smack dab in the middle of that target.
George Mary did it. She told some people you were in trouble, and they scattered all over town collecting money. Didn't ask any question, just said, George in trouble, and tell me you
what is this?
like a spread like fair.
Another run on the bank? Here, George. Merry Christmas.
There we are.
Okay, finance legends, it's time for one of our favorites, the Buzzword Breakdown with Ryan, our producer extraordinaire. Come on in and call out those 5 buzzwords for us.
All right, 5 buzzwords, 1 sentence each, or I'll clip your wings and make you walk the snowy streets to Nick's place. First buzzword of the day is upfront mortgage insurance, specifically with FHA.
Yeah, FHA, that's their one-time lifetime tax. It's worth it for the low down or low credit score scenarios. It's your entry level. It's definitely worth it.
Second up is PMI.
Hey, that's Potter's Toll for low down, aka monthly mortgage insurance, and it beats 20% down all day long. But once you hit 20% equity for a conventional loan, that mortgage insurance drops off. With FHA, you better refi that bad boy because it doesn't just drop off. Remember, mortgage insurance is your friend. It helps you buy without breaking the bank, aka low down payment. It's for everyone who wants it.
Third up, LTV.
That's short for loan to value, aka how much you place down versus how much your end balance is. Potter loves for you to have a high balance, higher for longer, just like the stinking feds do.
Fourth up is amortization.
Hey, that's the principal payback. Interest payments are heavy up front, but later the wealth starts to compound. And that's just like George Bailey's building and loan options. He's all about the people.
Fifth and final, escrow.
Okay, this is the auto pay within your mortgage payment for taxes and insurance. It keeps you safe to ensure your mortgage does not go south straight to Pottersville.
Okay, we're done. Wings intact. No midnight drinks at Nick's tonight. Don't make me regret it, though.
How'd you know my name?
Oh, I know all about you. I've watched you grow up from a little boy.
What are you, a mind reader or something? Well, who are you then?
Clarence Oddbody, AS2.
Oddbody. AS2. What's that AS2?
Angel, second class.
Okay, folks, that's your rally. If this felt like Clarence earning his wings, you're now equipped with the tools and the weapons to put an end to Pottersville for good and take control over your financial future through home ownership.
That's right. And be sure to like, follow, and subscribe, or even leave us a 5-star review. Oh, and tell the Potter next time you see one, aka your landlord, that 2 guys, one from Wisconsin and the other one from Hawaii, just unlocked your financial future, and you now have no ceiling. You are now placing a 30-day notice, and the second you become homeowner approved, you're buying a home, and you are no longer a renter.
We'll see you soon, legends, on our next episode of the Mortgage 101 podcast with Anthony and Manley.
Look, Daddy, teacher says every time a bell rings, an angel gets his wings.
That's right. That's right.
Babe, do you know where my bell is? My client just closed on their home, and Clarence said I earned my mortgage wings.
Hey, Manley.
No, don't.
Knock, knock.
We just had such a wonderful life. A hug.
Yeah, I know, but knock, knock.
Oh my gosh. Who's there?
Potter.
Potter who?
Potter who locked you out while George Bailey, you, rallies the town for home ownership for all of the people.
Okay.
Every time a bell rings, an angel gets its wings. Clipped.
Oh,
If you ramble next week.
That's it. You're banned for life.
mile marker number 4 next. Stay wonderful, legends.
If this episode helped you feel more confident about your home buying journey, do us a favor. Share it with a friend, subscribe, leave a review, and if you've got a question or topic you want us to cover, hit us up with a DM or a comment. Thanks for listening to the Mortgage 101 podcast. We'll see you next time.
Girl from the heart of Wisconsin to the waves of Hawaii. Manley and Anthony keep it real, not salesy. Breaking down rates and the truth you need to know with a little soul and a little homegrown flow. It's the Mortgage 101 podcast where real talk meets home at last. Manly's got that Midwest soul. Anthony brings that island roll when the market swings and you don't go fast.